Welcome to the latest Motley Fool Scoreboard. I'm Anand Chakapaloo, and we've got longtime fools Jason Hall and Lou Whiteman giving a 1 to 10 rating to hotly debated data/AI company Palantir, ticker symbol PLTR. We'll hit the business first, including factors like industry and competition. 10 is invincible, 1 is hopeless. Jason's going with a 7, Lou's going with a lower 6. Lou, start us off.
This was really hard because what Palantir does, they do really well. They were using advanced machine learning, AI, to make sense of a sea of data long before AI was cool. And they have real high-profile wins to show for it. Not many AI companies can say, hey, we found Osama bin Laden, right? So that is a real feather in the cap. The cloudy part for me, pardon the pun, is whether the potential market is as big as the bulls hope it is. Since Palantir went public, they have tried to become a master at many trades and use the software in a lot of different ways. And I think the jury's still out on those growth plans. A good bit of the commercial growth is tied to companies they invested in, which, cheers, but I don't know how sustainable that is. The actual growth rates today compared to what they were promising just a couple of years ago when they IPO'd. In some cases, it's about half of what they promised. And they tend not to be a cost leader, which might explain why growth has been harder than they thought. It's worked real well to a point. I'm just not sure how well it works as it expands. So a 6.
So I'll defer to Lou to a certain amount of this, especially on the defense side, where so much of their business happens with the government. But I'm a little more optimistic. I'm going to go with a 7 for my business score. Looking at the progress they've made in the commercial market, especially the U.S. commercial market, that business is accelerating. It's one of their fastest growing areas. And then their customer onboarding, they're growing their customer count at about double the rate of their revenue growth. And what we've seen is customers do tend to increase their spend over time. So I think there's some tailwinds and positives. So again, a 7 on the score.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Once again, Jason's at a 7, Lou's at a 6. We'll go with the low score.
Okay, so it's hard to imagine a company where Peter Thiel is involved, where Peter Thiel doesn't soak up all the attention. And yet here we are with Alex Karp. And I guess to his credit, he is able to steal almost any show. And here's what you get with Karp. And give him credit here. What you see is what you get. He has very strong opinions on data privacy, national defense, a lot of, things at a time when most companies tend to shy away from taking a stand. As an investor, I both respect that and I worry about the downside. So it's hard for me to give a grade higher than a 6 here, but I will admit, I like the blunt nature. It's refreshing to hear Karp talk.
Yeah, I agree. He's very unconventional in a lot of ways. But I think we've seen a lot of unconventional leaders that have led transformative businesses that have been massive winners too. So maybe that's less of a bug and more of a feature. We're going to find out over time. I'll tell you this, the shareholder letter that just came out was a banger. And he is planting the flag firmly. And this is just the very, very beginning of what their business can do and what the opportunity is going to be. We'll find out over time. You mentioned Peter Thiel. There's another co-founder of this 2-decade-old business. Stephen Cohen is the president. It's also on the board. Now, this is not the Steve Cohen that owns the New York Mets. This is a different Stephen Cohen. But the point is you've got 3 founders that are still involved with a 20-plus-year-old business that has done some pretty amazing things. The forward view that they have, I think, to see that opportunity 2 decades ago and then continue evolving the business, it says a lot about this management team. So Lou may be right, and that 6 might be the right score looking forward, but I think we might end up saying, wow, we should have given these guys even more credit.
Financials, a 10 is a fortress, a 1 is yikes. We've got higher scores here, 8 for Lou, 8.5 for Jason. Go with Jason.
So not only has revenue grown quickly, Lou made some good points. What maybe we were being sold out of the IPO might have been a little bit overly optimistic. But again, the things I mentioned before, we're starting to see customer growth accelerate. And we're seeing that on the commercial side as well. We're seeing acceleration of its defense business outside of the U.S. So there's some positives there. If we do continue to see customer accelerate and those customers start growing their spend, revenue growth could accelerate from there too. We've also seen margins increase. And it looks like it's gotten to a scale where we love to see these SaaS companies get to where the cash engine really kicks in. Free cash flow has more than doubled over the past year. And now it's about double stock-based compensation by so that's a positive. Lou's going to talk about stock-based comp it's enormous, and it's certainly weighing on shareholder returns.
Yeah, that's about the only ding here because yeah, there's not much not to like Jason said. I mean, 4.5 billion in cash, almost no debt, just to throw into a highly profitable growing business. What's not to like? $500 million in stock-based compensation over the last year. The share count has ballooned since the IPO. I'd rather not see that, but really we're grasping at straws here. This is a solid financial company.
Let's move on to valuation, Jason. How well will Palantir stock do over the next 5 years, and how safe is it? 10 is a sure thing, one's a lottery ticket.
So I'm going to go with my safety score first of a 7. Again, the growth rates, the profitability, what looks like they have some pretty good moats, exceptional balance sheet. All of those things are really positive for a long-term investment. But 57 times sales for a $140 billion company, that's just incredibly expensive to count on market-beating returns. Just for context, even at the dot-com peak, Microsoft and Cisco, they never traded for even more than 40 times sales. CrowdStrike briefly did at its 2021 peak, and then the stock crashed. Its enterprise value is also 71% less than Palantir's is at this moment. So I think when you put that valuation in there and really think about it, 5-year returns, I'm expecting 5 to 10% from here, and it could get really, really ugly at some point if we don't see good results and the stock really gets hit hard.
Yeah, I mean, ditto. I think we have the exact same scores, and yeah, my favorite stat was 200 times EBITDA, which again, I just don't see how that can sustain. It's not going to fall off a cliff. It's too good of a business, but market performing 5 to 10% seems like we're going to get regression to the mean at some point.
Let's move on to everyone's favorite topic. Jason, is there a company in Palantir space you like better?
I'll let Lou talk about some of the government-focused competitors out there. I'll say on the commercial side, highlight Confluent. It doesn't compete with Palantir, but again, looking at how companies are trying to leverage their data, especially when it's siloed, and try to get the most out of it as quickly as possible, Confluent is a real leader there, and I think it's underappreciated.
Yeah, there's no real comparison with Palantir, I think, on commercial or defense. Booz Allen Hamilton is the one I usually think about. But for this, let's go with Leidos Holdings because they are a good combination of defense IT and space hardware. My criticism of Palantir is they do one thing very well, but I don't know how it scales. Leidos has a broader set of top-notch offerings, and they have a lot of ways to win.
Thanks to both Lou and to Jason. They've given Palantir a decent overall score of 6.8 out of 10, short of that 8.0 that would force me to own shares. I think I was surprised that they scored the safety at a 7.5, a 7 and an 8, just because of that valuation. I guess we'll see going forward. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a solar play. Till then, Fool on. So this is exactly the wrong conversation to have as we go into the most dangerous stock we can talk about, Palantir.
Yeah, I mean, we should do a Lord of the Rings clip to begin this one.